everybody. Jeff Kibbe here over at Metastock. I hope you're doing well. I appreciate your coming today. We have one of my favorite presenters today, certainly one of our most popular. But before we get to that, let's go ahead and do your favorite part, the legal disclaimer. So today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. So today we have a very special guest, Steve Bigalow. I don't know really where to start with Steve Bigalow. We've been doing business with Steve since 2012. So we released the very first version of his the product I'm going to show you a little bit later today in 2013. In that time, Steve by far is our most popular YouTube speaker. He's had videos viewed over 1 million times, lots of really good comments. He's a great presenter. He's promised a number of good jokes. Other things I'll say about Steve real quick. I've had the pleasure of traveling with Steve, doing tons and tons of webinars with Steve, and the products that we've developed have been the most popular that we have. But in addition to that, just the ability to kind of go in and kind of really understand the way that he trades. I've implemented a lot of what I've learned both directly into my own trading with what he's doing. And we were talking at lunch. I was talking to Greg, who's here in the Man in the Sound booth. And he's
Hello.
like, well, hello, Greg. And he's like, well, how do you find the right options to trade? And I'm like, well, it's really simple. I do the J-hook pattern scan of Steve Bigalow's. So in any case, Steve is somebody that I have utmost respect for, always somebody that delivers an awesome class. And let's go ahead and get me out of the way. So in any case, Steve, how are you doing today?
Good, Jeff. Thank you for having me on, and welcome everybody.
Are you surprised by the fact that it's been 7 years?
It is. I thought it was maybe 3 years, 7 years. And I'm only 35, so think how young I was when we started all this.
Well, if you couldn't tell, I really appreciate the business relationship, and you've done a great job. We really appreciate what you've done with us and for our customers and all that kind of good stuff. Let me go ahead and turn the presentation and the screen over to you. Okay.
All right. Show my screen, okay?
I'll let you know when we can see it. We can see it. I'm going to go ahead and...
All right. Let me make it into slideshow. From beginning.
All right.
There, how's that?
It looks perfect. All right.
All right.
I'm out of the way.
Okay. First thing I usually ask, and I think I've got my question and answer box there. Ron, I will try that. But the first question I want to ask is, how many people have seen my presentations before? Y for yes, N for no. That will just give me a feel for how descriptive I should be on each slide. Okay, I've only seen 2 answers so far. Ron and Rick. Are you seeing more? Let's see. I don't know. Oh, maybe I've goofed up. Okay, it looks like everybody has. All right. So here's what we're kind of advancing to tonight then, is not only are we looking for the best signals and patterns, but we're looking for them when they're setting up for a breakout situation. And part of that is going to be, oh, I know what it is. that over here. That we've got some very simple rules on our signals and patterns. For example, the Doji rule. Now, the Doji represents indecision between the bulls and the bears. And the Doji rule is very simple. The Japanese rice traders tell us that the price will usually move in the direction how they open after a Doji or in the next candle. Now, when I say next candle, I'm usually going to use the term daily, but candlestick analysis is as good on a 1 minute chart as it is a monthly chart, because you can come back to one basic rule of candlestick analysis. The candlestick signals are formed with the accumulative knowledge of everybody buying and selling during a specific time frame. So if you're a long-term investor, you might be using the daily, weekly, and monthly charts. If you're a day trader, you might be trading something like the dollar or soybeans on a 10-minute, 5-minute, 1-minute chart combination. The signals and the information built into those signals are all the same no matter what time frame you're working with. So here's the 12 major signals. These are kind of your bricks and mortar, your bread and butter of candlestick analysis. Now, there's 50 or 60 signals and patterns out there, signals anyways, but most of them don't occur often enough to spend any mental time and energy trying to learn them. If you learn the 12 major signals, 6 basically bullish, 6 basically bearish, and you understand the rationale or the investor sentiment that created those signals, you have the same understanding of what's going on in investor sentiment as somebody that's been trading in the market for 40 or 50 years. And they also form patterns. And now this information is basically incorporating some of that, the individual signals for developing a pattern. But the important part of what we're going to go through tonight is when we see these patterns set up, we can see exactly when a potential breakout is about to occur. So we've got some strong signals with Dojis, your best friend, your left-right combo, a series of Dojis, Doji sandwich. And anytime you see a Doji, now the Doji is only one of the 12 major signals, but it's probably the most recognized and probably has the most relevant, because anytime you see a candlestick or Doji as part of a candlestick signal, it's usually going to be a lot more forceful than just a regular signal. So as we can see right here, this reversal was created by what we call the morning star signal, a down day, a day of indecision, kind of a Doji spinning top. A spinning top is a Doji but with a little bit bigger body, so it looks like a spinning top. And then the third day closes more than halfway up this candle with another confirming indicator. You can see this black line. This is the 8 exponential moving average. We call this the T line or the trigger line. Very simple analysis when you're using candlesticks, that if you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close back below the T line. That is very important because there's a lot of times where you might see a candlestick sell signal, but it's only just a quick pullback. And if it doesn't confirm by closing below the T line, you continue to hold that position. And there is a caveat to that. And that is the further away you move from the T line, especially in the overbought or oversold condition, the higher the probability it's going to come back and test it. So that also gives gives us more credibility when we see a reversal signal in the oversold or the overbought condition. Now, my oversold and overbought is I use stochastics, 12-3-3. And common sense or just the logic of the candlestick or the Japanese rice traders was that if you see a candlestick buy signal in the oversold condition, you've got a high probability there's a reversal. I am going to try to figure out how to I'm trying to get the question and answers, but I can't get that screen to get bigger. what
Hey, Steve.
if initially goes down.
Steve,
Yes. Go ahead, Jeff.
Tech
Yep.
Services here. If you just grab, if you pull that questions box out,
Yeah, I've got it pulled out.
if you grab it
But
by
it's
one
not
of the bottom corners, you should be able to stretch it.
okay. I've got it stretched,
Okay.
but it's only one. It's not very deep up and down. It's only.
Try from the bottom, pulling pulling it down with a drag and drop.
Yeah, it's for some reason, it's. Oh, can we ask questions now? Yeah, I can see that. So I've got two different boxes here. Yeah, so
Yeah, the questions is where all the questions will come in. The chat, you don't really need to have that large because we use that, but it doesn't show up.
Okay, I just did it. All right, now it's bigger.
All right, cool.
Yeah, you can ask questions anytime. Now I think I can see everything better. All right. There we go. All right. How does Steve stay so off? It's just because I'm good looking and people always just throw flowers at me. So anyways, these are the signals that tell us when we're at the tops and at the bottoms. One of the strongest ones is the left-right combo. Now, the reason we're showing some of the individual signals is this is what you can use to tell you when there's going to be a breakout of a pattern. Left-right combo is a doji followed by an engulfing signal. Indecisive, decisive, a very, very strong reversal signal. So if I see kind of a left-right combo and my stochastics are coming up and I'm closing up above the T-line and I'm breaking out through this level, that tells me I'm probably in a position to get into a very strong breakout position. Why? Because notice how this was all indecisive until that left-right combo told you there is now a new dramatic force in that price move. Left-right combo, right smack dab off the 50, breaking this level, staying above the T-line, strong price move. Left-right combo. This is what we call a series of dojis, obviously. If one doji means indecision, this is a very good alert telling you that you're in the oversold area, you're at the bottom of a downtrend. Now all of a sudden you're getting some great indecision. Remember, a doji shows indecision. And if one doji shows indecision, a series of dojis show greater indecision. And then look what changes this to start breaking you out to the upside. There's your left-right combo. If you aren't buying on this day, let's say you didn't see it, and this is the whole point of Metastock, or what we did for the scanning process, that when we can identify very quickly this signal, we know what to do the next day on a positive open. Left-right combo, kind of junky down here. Until you hit the left-right combo, that started your next move to the upside. So I'm looking for things that tell me, especially when the probabilities are greatly enhanced by being in an oversold condition, I'm seeing a left-right combo bullish signal. That tells me I've got a high probability that we're going to start breaking to the upside. Now, remember what our simple rule of the doji is. The price is usually going to move in the direction of how they open after a doji. Is that a cradle pattern? Yes, it was, John. I don't know how to get back there, but I've got some more. So yes, it can be considered a cradle pattern as well as a series of dojis. How do you scan for these patterns? Ziad, that's what Jeff is going to show you with the Metastock software. This is what we've worked on for years to get that set up for you. So a doji sandwich is a candle, in this case a dark candle, and then a doji. And then remember our doji rule. The price is usually going to move in the direction of how they open after a doji. They open it lower. What do you want to be doing? You want to be going short because we know the magnitude of this candle is probably going to be the same as the magnitude of this candle. And look at the other facets of this reversal. There's our bearish engulfing signal. There is our hanging man. Look at the shooting stars. This was all starting to tell us they were starting to get a little bit weak. And then there was our sell signal. When was it time to close out the trade? Right here, if you were long. When was it time to go short? When they gapped it down from that doji with the prospect of having this candle the same magnitude as this candle doing a doji sandwich, that's telling you the force is starting to go in the opposite direction. I am going to do this. I got to move this over to where I can see it better. There, I can read. Oh, pshaw. There we go. Okay. Yes, Robert's having a problem with audio. Okay.
I'm working on it. I'm working on it with him.
There's our left-right combo, right off the T line, or that might not even be the T line. Oops, that's a bad, something happened on that chart. But there's a left-right combo, and then notice where the doji sandwich occurs, right here on the 50-day moving average. Oh, so I guess most of you already know why we have these moving averages. The 200 is the red, simple moving average. The blue is the 50-day simple moving average. And then the black line is the 8 exponential, but it's goofed up on this chart. I'll get a better one. But notice where this doji occurred, right smack dab on the 50. Now, we know the simple doji rule. If it opens positive, it's going to trade positive, and it's probably going to do a doji sandwich. And if it does that, what's it tell us about the resistance at the 50? It's not there anymore. Where do you think we're heading now? Up to the next major moving average. So this is the T line, the 8 exponential moving average. This is the 34 EMA. Now, the nice thing about candlesticks is a lot of people say, well, why don't you put such and such moving average or this indicator on? The major benefit of candlestick analysis is that the signals are very accurate. Then anything else you put on your chart is just a confirming indicator. Now, we've got the 200-day simple and the 50-day simple moving average. And a lot of people say, well, isn't the exponentials more accurate? We're not using those moving averages to make our decisions. We're using those moving averages because everybody that manages money uses those moving averages to make their decisions about their portfolio. We're just seeing what their decisions are at those levels. So we know exactly what's happening when it gets up here. Look at our little kicker signal, one of your strongest reversal signals. Look at what happened when it got to the 200. We had a doji, and then it started failing. Then we had a kicker signal. This time it went through the 200. So we could see exactly what the investor sentiment was at that level. Where was our next likely target? The 50-day moving average. So we don't use the moving averages to make our decisions of what is going on. We're using the moving averages to see what everybody else's decisions is going on. The stochastics are slow stochastics. Now remember, you're using stochastics just to make sure that you're not buying a buy signal in the overbought condition. And you're not buying a sell signal in the oversold condition, or you're not shorting a sell signal. Logic says if you see a candlestick buy signal in the oversold area, that's probably a reversal. If you see a candlestick sell signal in the overbought area, that's going to be a much better probability you have a reversal. Which EMA? This is the 8 EMA. We call this the T line. Very simple. If you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close below the T line. So anytime you see a doji as part of a candlestick signal, it's going to be much stronger. So a bullish flutter kicker signal is very simple to identify. It's different than the doji sandwich because this candle, as you can see, is a bullish candle. Then notice what happened the next day. It opened at or below the previous day's candle and did a doji. Then what's our doji rule? If it trades lower, what do we got going on? This is what we call a bearish flutter kicker signal. We call it a bearish flutter kicker signal because we know a kicker signal. Oh, let me go back. A kicker signal is when it opens here and closes here. The next day it opens at or above the previous day's open and goes the opposite direction. That tells you they've pretty much kicked the investor sentiment in the opposite direction. A flutter kicker signal is we already have the warning that there may be a reversal because look what happened up here. They gapped this down and below the previous day's open and traded indecisively. That was our first alert to tell us there's probably a dramatic change of investor sentiment. When they start selling it off and heading for this bearish candle, we're shorting immediately because we know what type of formation, what type of signal it's setting up. A bearish flutter kicker signal. The flutter being this little doji. So basically, if you took this doji out, the flutter, you essentially have a kicker signal, which is one of your strongest bearish reversals. Right here, notice it opened here, closed here. The next day they gapped it up and they did kind of a gravestone doji. What's our simple rule of the doji? If it opens positive, we can be buying immediately because it's probably going to trade positive. If you took out this little flutter, you have a kicker signal. And where did this kicker signal occur? Right at the level that everybody was watching to see if they were going to start buying. So again, I keep telling people this is not rocket science. This is just identifying what usually happens in human nature, that the Japanese rice traders have already done the research, not computer research, because this was all going on hundreds of years ago. That gap up above the previous day's open told us get ready for a very strong reversal signal. Do you pay attention to the size? Yes, you want to see a good size candle. Now, even if it did a small candle and then gapped up, it would be a different signal. But the fact that they did a big candle, doji, and another big candle, that tells you that's a big change of force in that price move. So this is what we call 2+2 analysis. This was NVIDIA just here in the past week or so. Notice what we got right here. When it gapped up above this open, we were ready to start buying calls right here. Because if it opened positive, which way was it going to go? Was it going to go positive? What do we have? A bullish flutter kicker signal. Now, why do we call it 2+2? Because if we can anticipate that it's going to come up some more, what pattern have we got setting up? A fry pan bottom. And where did this fry pan bottom reverse? They couldn't get down through the 50. You could see all the buy signals, bullish engulfing, bullish harami, hammer. Came back up above the T-line. Almost hit the top, pulled back, but then this was, again, a very good price to be buying or place to be buying because of the bullish flutter kicker. Price move crosses up and down EMA very often, given many false signals. Yes, and when it does that, what's it telling you? It's telling you there's no direction. So if I'm buying here and it opens up here and starts trading off, is that a bullish confirmation? No. If I'm buying here, what am I looking for? A bullish trading. It opens lower. Was that bullish confirmation? No. So it's trading up and down above the T-line. What's it telling me? I don't want to be trading this one right now. Not until I see something that's more compelling. Now, If you were buying here, yeah, you could make a quick trade up here. Next day, and again, this was all during that time frame when we were getting the tweets, but this was a piece of evidence that told us that they gapped it up and then they opened positive. The bullish flutter kicker told us we wanted to start buying. Where's our next target? We were going to watch to see what it did here. Notice what it did there. It gapped through that level. We were buying, I think, I forget which calls. They were like for $2.30, and we closed them out at $14.10 a few days later. Not because we're any stock pickers or knowing what's going on in a company. We're seeing what everybody else's decisions are about that price move. So bullish flutter kicker, would that tell me? That my fry pan bottom was probably very much in effect. See something like this? There's our best friend signal, a doji gap up. What'd that tell us about our breakout? We have a fry pan bottom breakout, probably a lot more upside. So the doji best friend is a doji gap up. The reason we call it your best friend is not only do you have an extremely high probability you're going to be in an uptrend, you're probably in a very strong uptrend. So the reason we call it your best friend is because the probabilities are greatly in your favor of being in a bullish trade, as well as a very strong bullish trade. And these type of signals aren't things that just occur occasionally. It's also our best friend because they occur quite often. They tell us when to start getting into good, strong positions. Same scenario on the downside. A doji gap down, that's your bearish best friend. Where do you think this one is going to? Probably back down to the bottom of this channel. What does a doji tell you? Indecision. What's a gap down tell you? They've made a very strong decision. They're going in this direction. Kind of a doji gap up. What'd that tell us about this resistance level? It wasn't going to act as resistance. Where do you think everybody and their brother is buying? They're buying when they see it broke out through the 200. How are we prepared? As soon as we see it open above this level, we're buying here, knowing more than likely everybody else is going to start piling in because they see that it's broken that resistance level. This is why we look for moving averages and trend lines and anything else that you can consider a resistance level based upon what is everybody else watching. So if I see this doji gap up, what is the first inclination of most investors? Boy, oh boy, I don't want to be chasing after this. I'm going to wait for it to pull back. This is what we're looking for. We can be buying immediately with confidence that there's probably a lot more upside as that best friend signal starts. Again, 2 plus 2. There's our doji gap up best friend signal. What type of pattern is it creating? Well, we can see it's already creating a J-hook pattern. Where do you think our next likely target's going to be? Up there at the 200. Why? Because wave 1 and wave 3 are usually about the same magnitude. Best friend coming out of this fry pan bottom, closing above the 50 and the 200. What did this little piece of information tell you? That there's a lot of bullish force starting to come into this into the investor sentiment. Prices move. Oh, we did that one. Yeah, so false signals. There aren't false signals. Or what do most investors tell you or money managers tell you? They tell you to cut your losses short and let your profits run. The problem is they never tell you how to cut your losses short and let your profits run. If I'm looking at a signal, and I don't see one on here, I don't see one that I could illustrate. But if I see something where there's a buy signal and then all of a sudden it trades lower the next day and I'm in it, I get right back out because it didn't break out like the signal or pattern told me it was going to. So the benefit of candle pattern identification is it allows us to start taking advantage of pattern setups. Look at our left-right combo, belt hold type signal. Look at our little rounding bottom here. That puts us into a strong price move. Notice what's going on right here. There's our morning star signal, right smack dab off the 50. What's that telling us? There's our J hook, wave 1, wave 2, going into wave 3. So, and we also have the McMuffin. We know the morning star signal is a strong reversal signal in candlestick analysis. There should be more upside. We know a doji sandwich usually illustrates there's going to be more upside. So if you have a morning star signal followed by a doji sandwich, you know there's a high probability there's going to be more upside. So a morning star signal can be 1 or 2 days of indecisive trading, followed by a doji sandwich. What's that imply? There's been a strong change of investor sentiment. The morning star signal alone is a good reversal. The doji sandwich alone tells you there's more upside. When you combine the two, it just enhances your probabilities of not only being in a bullish move, but a very strong bullish move. Morning star signal, doji sandwich, starts your uptrend. So because of the scanning capabilities, and again, I forget, how many do we have on Metastock now? About 18 that you can easily scan for 18 different signals and patterns that are going to produce high probability results.
I think it's closer to.
So the important part of scanning is not to be spending all night long looking for signals and patterns. It's spending a few minutes finding the signals and patterns and then taking some more time to kind of analyze from that supply of signals and patterns which ones have the most the strongest prospects. So not only are you finding a group of good trades, but now you can cultivate them to the point where you can find the best trades. So that fry pan bottom pattern, we bought Crocs. These are all kind of current positions that we have on. You can see the fry pan bottom. Where was the breakout level? There's kind of your double doji sandwich. We're buying right here because what's it telling us? They've broken out through the resistance of the fry pan bottom. What upside potential do we have? Wave 1, wave 2. There's our ultimate buying spot. So why is the ultimate buying spot important? Because you're not waiting around to see whether this is going to work or not. You got confirmation this is working, you're in the next wave. So whether you're buying stock or buying options, you're getting in without having to wait around to see whether the trade's going to work or not. Do you have these scanners for toss? Yes, they're a little bit more difficult to use, but that's why we like to use Metastock, because it's all right there in front of you. All you have to do is update it every day. Now you've got a batch of signals and patterns to look for. Left-right combo. Doji sandwich. Where did the doji sandwich close? Right here at the breakout. You can see the resistance level. We recommended this one today if it opened positive, because if it opened positive, what was it doing? It was confirming our bullish doji sandwich and telling us that this resistance level was not acting as resistance. What's our prospects on this trade? Wave 1, wave 3 in progress. Where was the breakout of this fry pan bottom type pattern? Right here. today. There was your resistance level right smack dab at the 50. When it started coming up through the 50, you could be buying because we knew what type of pattern was setting up and it was confirming. Now we're buying in here well ahead of everybody else that's watching to see if this is going to break out through the 50. The kicker signal, again, is your strongest signal. So when you see that kicker signal, not only do you have the prospects of a high probability bullish trade, but remember, this is a very forceful reversal of investor sentiment. That breakout move is going to be strong. Why is it a breakout? Look where it occurred. Up through the 50, through the T line, breaking this wave right here, going into the next wave to the upside. I love to show these patterns. Whoops, that's not it. Again, there's your series of dojis, which is also what we call a cradle pattern. There's your headboard, there's your bed, and there's your footboard, usually hanging down between two trends. That means you probably have a very high probability of a very strong price move. Volume is already I want to say, built into your scans. So let's say you're looking for dojis in the oversold area. So you're going to go to the meta stock. I'll let Jeff explain this more. But maybe you're only looking at stocks in your universe. My universe is stocks greater than $5 and stocks trading more than 200,000 shares a day on average. That already eliminates the volume aspect of it. Now, why do I want 200,000 shares a day minimum? That takes your trading universe from approximately 10,000 down to about 2,700. And on any given day, when you update your scans, you're going to have 3, 5, 10, 20, 30 good chart setups. And you don't have to worry about whether they've got enough volume because you're pulling these picks out of your universe that you've already qualified or quantified that they've got enough volume to get in and out of. Now, there's two reasons why I want to have good volume liquidity. One, obviously, if I'm ready to get out of a trade, I want to close it out and not have to try to get out of it over 3, 5, 10, 15, 20, 30, 40 minutes. I want to close out the trade and move on to something else. Secondly, the more volume you have, the faster the patterns or the signals are going to form or unform. So there's two reasons to have good volume. Now, a lot of people say, oh, I want to see the volume go up as the price goes up. Volume and price have absolutely nothing to do with each other. If a stock price is going up and nobody's willing to sell it, it's going to go up because people are paying for it, whether there's a lot of volume or not a lot of volume. Now, there is an aspect of volume that if you see a bottom signal, and I'm going to just pick out this day. Let's say on this day you saw a big, huge volume spike. Well, what that usually means is this is probably down here where the smart money is starting to buy from all the panic sellers. Or same scenario up here. If all of a sudden you see a reversal day and there was huge volume, that usually means the smart money was selling into the exuberant buying. So I know that was a long answer to say no. Volume is not important. Once you've made your parameters where the volume is now not out of the realm of being in your trading universe. So this is what we call a cradle pattern, and this was the alert. This big series of dojis or indecisive trading, that told you that the investor sentiment has changed. And not only has it changed, the longer this series of dojis, the more significant that next price move will be. Was that the same one? Might have been. Okay, so Jeff, before we came on, Jeff was saying, what do you think about this market? Well, this is what we think about the market. Notice what happened down here. As it, I should have made this bigger. There was kind of a wedge formation setting up. And this big hammer signal occurred at the bottom of the wedge. Started up, hit the T-line, pulled back. What was the market going to do? Maybe it was coming back to test the 200 again. Except when they gapped it up and did a doji day, we knew exactly what was happening immediately. That if it started trading positive the next day, we're buying, because that tells you that bullish flutter kicker signal was telling you we're in an uptrend. And right now, what's our prospect? You can draw a line from the tops right down through here, part of that wedge. That's probably your first target. Now, when I say first target, and I should have drawn a line in here, that if it gets up to that resistance level, we can see what the investor sentiment is telling us when it gets there. If it's an indecisive day, like a shooting star or a doji, now we've got to watch to see how they open it the next day. If they open it lower after touching this level, we know that was a failure. Start taking profits. If it's nice, big, bullish candle that goes through, that tells you this time they broke out of the wedge formation. Now there's a new trend to the upside. So if you're looking at or doing your trend analysis and you're in the overbought condition and you can see doji, gap down, your bearish best friend, that probably tells you that this trend is over with. So we made lots of money on the puts not too long ago on Roku. First of all, you had your bearish engulfing signal, gap down through the T-line. Oops, it looked like it might want to come back up, but what happened when it got here? Your doji, bearish best friend, more downside. So we stayed short all the way down to here, and what was here in the oversold area? We're starting to cover our short position because you're now starting to see buying down here. We also started going long because you did have a bullish spinning top gap up. We started buying in here because notice what we had right here, kind of your bullish engulfing, maybe almost a left-right combo. Where was our next likely target? Up here. And what did it do today? Kind of your bullish doji sandwich. Was this relevant? Yeah, look where they did it. They did it off the 50. Where do you think your next target is going to be? There's a little gap right here. So we'll watch to see what happens once it gets there. So again, when we can recognize the signals and use the T-line and the stochastics, that's about all you have to put on your chart. Then the moving averages just act like your playing field to see what the investor sentiment is at those levels. Daku, big gap up, kind of your bullish doji or bullish flutter kicker. Now you had a J-hook pattern. Look what happened at this level. There was your doji. If they opened up positive, what was it doing? A doji sandwich breaking out through this level, telling us that we could be buying calls at that level. Left-right combo. This is so strong that if you were long, you closed out the position. When it opened lower the next day, you could be going short immediately. Look what happened here. There's your best friend signal. Where did it occur? Right smack dab off the 50 up through the T-line. What'd that tell you? You're probably in an uptrend. Now, we can also add a few other aspects of investor sentiment. Where do most people buy? They buy exuberantly at the top. So how do we know there's exuberance? Look what they've done. They've gapped it up in the overbought condition. When we start seeing gap ups in the overbought condition, what's the first thing you should expect about human nature? That's the exuberance. Start looking for sell signals. There's your belt hold signal, uptrend, uptrend, uptrend. Got to the 200-day moving average and did a doji. When they open it lower the next day, what's that tell you about your uptrend? They finally hit a resistance level, take profits. Now what can you do? Remember, I say remember, one of the little adages or truisms about candlestick analysis is the bigger the signal, the more compelling there's been a change of investor sentiment. We went short. Down here, we started covering the short. What do we have right here? Here's your bullish doji sandwich telling you the uptrend has started. Where do you think it was likely to go to? The 50-day moving average. Do you trade the open or wait for volume to build? Peter, we also have a training session in our chat room. We have a chat room we have open every day. And then on our website, you've got 2 chat rooms. You've got the main chat room for identifying signals and patterns. And then we also have an option trading room where everybody's trading based upon the signals and patterns. But I put out 2 or 3 stock picks every day. And we have training classes during the week. As a matter of fact, we've had 3 of them so far this week. Last night it was on the left-right combo and the best friend signal. The night before that was projecting targets. We also do live training sessions for members on entry and exit strategies, or how to scan, or when to take profits. I mean, these are all just analyzing the charts, which is very simple visual analysis. And the one thing that kept me learning candlesticks was that everything I learned about candlestick analysis was just mere common sense put into a graphic depiction. Now I forgot the question. Oh, so if I'm ready to buy, we've got 4 quadrants that we show in our entry strategies. Yes, they are recorded in the members area. But there's 4 quadrants. If I think the market is going up and this is opening positive, I'm probably buying within 90 seconds. If the market opens negative and this opens positive, yeah, I'm going to wait to see if the market has reversed or if it's going to affect the stock price. If it doesn't, then I can start buying. Or if the market opens up and this stock opens lower, that's exactly the wrong way, but I will start buying if it starts coming back up because the market's going up, confirming that signal. Or the 4th quadrant is it opens lower and the market's opening lower. That's telling me, you don't want to be buying right now. It's not confirming. So it's just common sense. If you see a buy signal and you're ready to buy, but you wake up in the morning and you see that the pre-market futures are showing the market's going to open up down 150 points, yeah, you're not jumping in and buying, even though that was a buy signal the previous day. So there's your bearish left-right combo. There's your bullish left-right combo. Starts your uptrend. Why was this relevant or significant? Look how far away you've moved from the T line. So if I see a left-right combo, especially in the overbought area, I'm going to take off probably at least half my position, if not all of it. In this case, if I took off half and it gapped down the next day and I took off the other half, at least I can live with myself that I got an average sale price around here for that trade. But then look at the other side. A left-right combo gap down. What do you want to be doing, especially with it trading below the T line? You want to be going short. Left-right combo. You want to be going short. Morningstar signal with a doji right smack dab on the 200. What did that tell you about the sellers? The sellers have quit and the buyers were stepping in right here at that support level. So again, this is not rocket science. This is just common sense, knowing what each individual signal is illustrating. And we know what the results of the signals and patterns are based upon where they're occurring in the trend. So anyways, that's why we've put the scanning signals and patterns into the Metastock scanning, so you don't have to be hunting for them. They'll come up automatically, and I'll let Jeff tell you about all that. But I also want to let people know that Saturday, we're going to be spending, we usually promote it as a 4-hour training session on how to recognize where the signals and patterns are just about ready to break out to the upside. Unfortunately, our 4 hours usually last 6 hours. But what it does is it kind of consolidates your analytical process of the signals and patterns to see exactly where the breakout is likely to occur, so that you're not sitting around in a position for a week or two waiting for that pattern breakout to develop. And I think, Jeff, you got the link for that. I'll let you put it in. So with that, that's about all I got. Are there any questions on candlestick analysis?
Shared that link for you, Steve. And in addition to that, we didn't have a lot of questions that came in on YouTube, but we had some comments. And
Okay.
Let me just look at him. JS says, a big thanks to Steve Bigalow for changing my world around candlesticks. Truly changed my life. I said,
well, good.
I agree.
Okay.
We did have one question about what the T and T line stands for.
It was short for, we didn't know what to name it when we first came up with it. As a matter of fact, it was brought to me by one of my first private training students that came down from Anchorage, Alaska, Rick Sadler. And we sat in front of the screen doing a private training for 2.5 days. And then he went back up and he got a hold of me later and said, hey, put the 8 exponential moving average on your chart. Now, again, the nice thing about candlestick analysis is the signals are your top criteria for telling you when there's a reversal. Anything else you put on your chart is just something that would help confirm that the trend is moving. So if you put something on your chart and it doesn't work, you take it back off. But when I put the 8 exponential moving average, and he said, and told me, he said, I've studied it. As long as it stays above the 8 exponential, you can stay long until you see a sell signal and a close below the 8 exponential. So we didn't know whether to call it the trigger line or we had a bunch of different names for it. And somebody said, well, let's just call it the T line for right now. And so that's been, just so we're not taking a long time describing or naming something. The T line was a very simple name for it.
Well, we have had an official request through our YouTube channel for a coffee and a donut sign. For what it's worth.
A coffee and a donut. Donut what?
A coffee line and a donut sign. Never mind.
Okay.
My wife tells me that the best way to tell a joke is if you have to totally explain it. So just don't worry about that.
That's right. Yeah. Oh, but most people have probably heard me tell that you don't have to overanalyze candlesticks. It's because of the lady that brings her parakeet into the veterinarian and lays it down on the table and said, can you help my parakeet? He's been my best friend for years and something's wrong. And the vet goes, ma'am, I think your parakeet's dead. And she goes, oh no, isn't there something you can do? Something to check to make sure he's been such a good friend. He goes, all right. So he goes out to the back of his clinic, brings in a cat, lays a cat next to the parakeet. The cat sniffs the bird, looks up at the vet and kind of shakes its head and he goes, ma'am, I'm sorry, but your parakeet's dead. She goes, oh no, are you sure? Isn't there something just to make sure? He's been such a good friend. I hate to lose him. And he goes, all right. So he goes out to the back of his clinic and brings in a great big Labrador retriever. Dog comes in, puts its paws up on the table, sniffs the bird, looks up at the vet, shakes its head. He goes, ma'am, I'm sorry, your parakeet's dead. He goes, oh no. So they go out to the front desk and he goes, all right, well that'll be $250. She goes, "You're charging me $250 to tell me my parakeet's dead?" He goes, "No, ma'am, I would have done that for 18 bucks. Then you wanted a CAT scan and a lab report after that." So I tell people you don't have to overanalyze candlestick signals and patterns. It's all just common sense built into the graphics. All you have to do is learn to see which signals are telling you there's been a reversal. Yeah, the 2+2 is basically just putting your analysis, adding as many pieces of evidence into your analysis that the bulls have taken control and that's still in an uptrend.
Well, let me go live.
All right, you got anything else, Jeff?
Just a big thank you and a lot of praise. I'm sure you saw it in the GoToWebinar. Long says, "Thank you for the valuable presentation." Ziad says, "Steve, you're truly brilliant." And I agree with that. as I said before.
I tell people, if you learn from your mistakes, I'm one of the smartest traders you'll ever come across. I've made so many mistakes in trading. I've even made the same mistakes over and over just to make sure I had those mistakes down pat. So anyways, well, thank you everybody for showing up. Again, we've got a full day's training on how to recognize when the breakouts are going to occur. So Jeff, I'll let you explain how you can use the information on Metastock to find all the signals and patterns.
Awesome. Thanks, Steve. Really appreciate your time. I'm going to copy that. I'm going to try and copy that link again one more time into this room. I think I got it here. Okay, there we go. In case you're interested in doing that, I'd recommend it. Like I said, Steve's been one of my best teachers and a lot of fun as well. So let me go ahead and what I'm going to do is a lot of you have been asking how this works, what kind of patterns are included, et cetera, et cetera, et cetera. So this is the second version of the Steve Bigalow candle profit system. It's our most popular add-on, completely our most popular modern add-on. I'm very proud of it, and you're going to notice that as well. But a few things I'll tell you about it as we kind of get started. Initially, when we kind of put together the first version, I sent it over to Dennis Peterson, a very technical guy over at Stocks and Commodities, and he took a look at it. He absolutely loved it. He gave us a really, really positive review on it. A couple of years ago, when we released the 2.0, I sent it over to Barbara Starr. Dennis Peterson, unfortunately, passed away, which was sad. But I sent it to Barbara Starr, who does some reviews for us in Stocks and Commodities, and she gave it a glowing review. This add-on particularly, not only is it our most popular, we typically get... Hello? 2.0. I sent it over to Barbara Starr. Dennis Peterson, unfortunately, passed away, which was sad. We're getting a little bit of feedback on me. Does some reviews for us in Stocks and Commodities, and she gave it a glowing review. This add-on... Did it stop? Okay. Sorry about that. It's also been rated one of the most popular add-ons, one of the best add-ons, not just for Metastock, but for all of the add-ons that are available for different platforms out there. So I'm proud of it. We did a great job building it, and I certainly appreciate Steve's work on it. Steve had mentioned a little bit about the patterns that we'll identify. I actually counted them up, and between this slide and the next slide, we'll identify on a chart for you 31 different candle patterns automatically. And I'm going to show you how that looks on a chart. But here's a list of all the multiple day patterns, the J hooks on there, the fry pans on there, the flutter kickers on there. One of my personal favorites, the Doji best friend and the Doji at the top are on there. And they're all broken up into different ways that you can look at them. In addition, we identify what Steve calls his the most powerful single day patterns, like the Doji, the bearish engulfing, the bullish engulfing, all that kind of stuff. So I want to show you how that looks on a chart and kind of how that'll appear on a chart for you. So I do have a chart open right here. And what I'm going to do is I'm going to just go ahead and put this out to a monthly view and just kind of show you what that looks like on a monthly view. This is the Dow Industrial Average. You know, I like to look at the Dow. I like to trade options on the Dow quite frequently. And I just want to kind of give you an idea of what this looks like on a monthly chart and kind of how this will appear on your chart. So right here, we've got the left-right bearish combo. during this huge up move right towards the bottom, you had this cradle, you had a doji sandwich on the way up, another doji sandwich on the way up, had a J hook. And right here, the most recent monthly signal that we've had is the left-right bearish combo. And you might be saying to me, well, I don't really want to trade on a monthly basis. I want to look a little bit closer. And that's valid. You can actually apply this to any time frame. So for example, I'm going to drop this down to a daily chart. And we'll take a look at some of the patterns that automatically occur on the doji. So the most recent one that we identified on DIA, the ETF for the Dow Industrials, is you had this doji best friend right here. You had a doji sandwich right here, right before this nice move up. Haven't had a lot of multiple day patterns show up recently. I'll even go down a little bit further. Let's go ahead and drop this down to like a 240-minute chart. And I just want to show you kind of what this looked like over the last couple of days. He had a great bearish doji sandwich on a 4-hour chart, okay, followed by a dramatic move down to the downside. Here you had a left-right bullish combo, followed by a doji sandwich, followed by a bull kicker all the way up here. So this works really, really well. It certainly doesn't, every signal that you get isn't going to be like a golden signal. Some of them don't work. And, you know, full transparency, right? But one of the things that we do as part of this is we go in there and we kind of tell you what to look for when you're doing a pattern. So, and it's a tool of MetaStock that I absolutely love. We call it the Expert Advisor Commentary. So I'm going to open that up on the chart for you. Here we're going to go into View, Expert Commentary. And you'll notice right here, as soon as I open up that window, it's going to put an arrow above the chart for the bar I'm looking at. So I'm looking at a 4-hour bar right now. There's not really any patterns that we're identifying on that chart. So it's just going to give you a little bit of background on Steve. There's not really much on this chart right now that we're going to talk about. So what I'm going to do is actually move it to this arrow to maybe this left-right bullish combo. So I'm going to go ahead and move that back. Okay, and you'll notice I've just moved the arrow back, and now it's going to tell us that there's a bullish engulfing pattern on this day, as well as your left-right bullish combo. And what we're going to do here is I'm going to read this out a little bit, but I'm not going to read the whole thing. But I want to give you an idea of kind of the detail that we go into and how we kind of define this for you. Because what we want to do is we want to be able to provide you some really, really good context about what the pattern is, how you should use it, what you should be looking for with it, et cetera, et cetera, et cetera. And this is some commentary Steve and I put together, and we took the content from it directly from his courses. So on this day where we got this, or on this bar where we got the left-right bullish combo, right here you've got, it's going to go ahead and label it on the chart for you. A left-right combo bullish occurred. This is a doji followed by a bullish engulfing signal. So very, very simply, that's all it is. It's a doji, that indecisive bar that Steve's talking about, your indecision, followed by decision, a bullish engulfing, okay? So it goes on to say, traders can take advantage of this signal and look to go long on this left-right bullish combo with prices in the oversold area, which is nice, but it's not a necessity. A doji forms, followed by a bullish engulfing signal, setting the stage for a great trading opportunity as buying remains evident on the next day. Long positions should stay above the close of the bullish engulfing signal, and you could read the rest of it. But what we're really trying to get at is here's what the signal is, here's what we're looking to do with it. And a lot of times you're going to be looking at these signals because you've run a scan, which I'm going to show you how to do a market scan in just a minute. But the reason that's the reason we actually put in these enhancements. So if I scroll down just a little bit, these are what would make this even a better left-right bullish combo. This one worked out really well. Let's see how many of them applied. The bigger the bullish engulfing signal, the more powerful the new uptrend would be. And so we did have a very, very little doji followed by a huge engulfing pattern. That one looks like it fit that one. If the signal occurs at a major technical level, like a moving average, trend line, Fibonacci number, basically at a support area, the more powerful it will be. And you'll notice right here, this signal started down below your T line and went through all of the major moving averages, except for I think this is the 50. So it occurred right here below support, very, very strong move up above support, So this would look like a really, really good trade. If you're looking at a bunch of different bullish, left-right bullish combos, these are the things that you'd want to look for. How big was the bullish engulfing candle? And how is it at a major technical level? Is it at my moving averages? The fact that it kind of opened up below the T line, closed above it, tells me that it's a very, very powerful one. And that type of definition is included with every single one of those patterns, all 31 that were on that matrix there. Okay. Now, like Greg and I were talking about in regards to finding patterns, I had said earlier that I love to look for the Doji best friend. It's by far my favorite pattern. And a lot of you have asked, how do I find these Doji best friends? How does scanning work in Metastock? And I'm going to show that to you. It's very, very easy to do. So I'm going to open up what we call the Power Console here. Okay. And I've marked these as my favorite scans, so they show up right at the top of my list. Excuse me. Okay. And so you'll see there's a Doji Dynamite, a J-hook pattern, a major pattern, a power signals, a price patterns, a universe, and a universe oversold. Okay. The universe, what that looks for is that looks for stocks that have a minimum amount of volume and that are above $5. So what I generally do is every once in a while, like every quarter or so, I'll go through and I'll scan all of the optionable stocks. And I'll say, okay, which one of these have a minimum volume of at least 100,000 shares and which are over 5? And we've got a scan that does that for you. You run that scan once a quarter. You save that off as a list that you can scan on a daily basis to find whatever patterns that you want. And in case that isn't very clear or you have questions, as soon as you get this thing, I'm actually include a video that walks you, okay, step by step. Here's how you run that scan. Here's how you save the list. Here's how you run the scan against the list, okay? So on a daily basis or on as often as you want, if you're going to look for patterns that you want, you'll run any of these top 5 scans. You've got your Doji Dynamite. If I hover over it, it's going to tell you exactly what you're looking for. We're looking at the Doji at the top, the Doji best friend, and I'll quit reading because, generally doesn't come up. But each one of these, it'll hover over. It's going to tell you exactly what you're actually looking for, okay? What I'm going to do is I'm going to just run this Doji Dynamite. So I've run them all already, and I'm going to run it against that list that I've saved off. That's the universe. And you'll see right here, when I set it up, I ran it against all of the 4,325 optionable stocks. Based on the criteria of having a minimum price and volume, I was able to weed that down to 2,460 that we're going to run every day. And so I'm just going to start this as an exploration. We're going to, this is data that I've stored locally, which is very well worth doing. And you'll see how fast it's going to go through this 2,400 stocks. It's flying through them. The other thing that I'm going to point out while it's running is this. Out of the 2,460 stocks that we're looking at, 97% of those I have no desire to look at because they don't have an opportunity that I'm interested in today. 96.6 is where it ended up. So now, there's so many options that are out there. There's so many optionable stocks to be really succinct about the language that I use. What I want to be able to do is ignore all the clutter and the garbage and the stuff that doesn't have an opportunity. I want to be able to focus on the stuff that has an opportunity, right? So this is the way the scan is already done. I'm going to go ahead and make it a bit full screen for you. And what you're going to see here is the different columns. So this is Doji at the top, Doji best friend, left, right bull, left, right bear, series of bull, Doji sandwich, the muffin, what the stochastic value is reported in this last column, as well as the close. So for me personally, I've already said one of my favorite patterns is the Doji best friend. So if I wanted to identify out of these stocks that are left, which ones have a Doji best friend, all I'm going to do is I'm just going to sort on this column, okay? Right here, instead of looking at 2,300 and whatever number that insane number was, if I'm just looking for a Doji best friend, there's maybe about 9, 10 that I can look at right now that I know have a Doji best friend that is actionable right now. In addition to that, I can see exactly, without even opening up the chart, what the stochastic value is. So I can know if it's in an overbought or an oversold state. Okay. Once I get done with that, again, let's just pick out a few that we want to look at. Let me look at Juniper here, Coca-Cola. Let's go. Yeah. American Financial Group. We'll look at consumer staples as well. So I'm just going to pick a handful. Normally, I'd actually look at all of them and determine my favorite. But let me just go ahead and open up these as charts. What's going to happen is it'll open up all of the charts. I've got it set up to go ahead and add the expert advisor and the templates and stuff like that. And then I can just eyeball, okay, which ones have a Doji best friend at a major support level, which ones look like they've worked out pretty well in the past. So this consumer staples, we had a Doji best friend. Here's that very clear definition for you. Here's the enhancements that you're looking for. This Doji best friend appears to be happening at around a major support level. And if we zoom in a little bit, it did start at the bottom of the T line and moved up. So that one might look pretty good for me. I can go to the left a little bit. Here we had a doji at the top. Stock fell apart. Had a bear kicker. The stock fell apart. Here you had a nice scoop pattern. Stock went up. Here you had a cradle pattern. Stock went up. Fry pan in an uptrend. Look, it didn't work out. Okay. You had a slow curve and a doji sandwich here. You had a doji in the top. Didn't work out. Okay. Slow curve. Really nice to move to the upside. You can see why people like this thing. Let's just look at another, maybe one of the charts. I'm going to go ahead and minimize this one. Here we had American Financial Group, also has a Doji best friend. We knew it would have a Doji best friend. We wanted to focus on those Doji best friends. Here, again, if I'm just looking at this for this one, right at a support level, here you had a dumpling top. Here you had a doji best friend. Here you had a doji at the top. And I think you get the idea. These signals are more reliable than they're not. And we give you recommendations for getting out of the trade as well. So in any case, there's kind of an overview of just why this product has been so popular and has worked so well. Let me go ahead and kind of just talk a little bit more about it. I'm going to go ahead and try and go back to my PowerPoint. Hopefully I still have it up somewhere here. Yeah, okay. So it includes in total the 6 explorations, the 2 market universe ones. We were able to put all of the patterns in one expert advisor, so you have all of that. All of those candle patterns are all on the same chart. You've got 3 different layouts. You've got 36 different patterns in there. And you also, as part of it, you get a 40-minute training session where I actually go in and we give an overview of the patterns. And I show you, okay, here's exactly how you set up your scans. Here's how you do your pre-filter. Here's how you open up the charts. Here's how you, it didn't need to be 40 minutes, but the idea was if you're new to Metastock, this is what you needed to know to successfully get off the ground and run this program. So normally the product itself is a one-time cost. It only costs like $499. Here at the webinar today, I'm going to give you a discount. We're going to let you get it for $399. Okay. Not only is that probably one good trade for most of the people that are watching here, if you don't like the product after you get a chance to try it, we back it on our 30-day money-back guarantee. So you're welcome to give it a go, see how you like it. You're going to like it. It's one of my favorite add-ons that we do. So included with that $399 price, what we're going to do is that we're going to include that bootcamp training session that's available for you as soon as you complete your order. It's right on the My Downloads page. It's going to help you. Even if you're brand new to Metastock, it's going to tell you exactly what you need to know to run your scans, get the expert advisor ready, and that kind of stuff. Steve shut off the webinar. Let's continue to use YouTube. So for those of you that had an abnormally abrupt ending to the webinar and came to the YouTube recording, this is what you missed from here. So you'll get that bootcamp training session. You'll get a trial of Metastock as part of it. If you need a copy of Metastock, we'll give you free access to it. Metastock, we haven't talked a lot about it, but I had a chance to show off some of the capabilities for it. It's been, the only thing I'm going to tell you about it is been rated #1 by the readers of Stocks and Commodities magazine 25 years in a row. You can find out why. We're going to give you a free trial to it. We're going to give you a 30-day trial membership to Candlestick Forum. To take advantage of that, go ahead and get in touch with us at metastock.com/candlestickforum. If you have any questions, if you want to get some charts pulled up for you, et cetera, feel free to give us a call, 800-882-3040, or you can chat online with us at metastock.com/saleschat. So I do appreciate you guys coming. Sorry for those of you that got cut off a little bit early, but hopefully you came back and saw the presentation. I do have a recommendation for you guys. If you haven't tried this product, if you use Metastock, you need to try this thing out. There's a reason that it's been the most popular one-time purchase add-ons that we have. If you're new to Metastock, find out why it's been rated #1 for 25 years in a row. So we look forward to hearing from you. If you have any questions, please feel free to reach out to me. And I want to say thank you for Steve for coming today. I want to say thank you for coming today. And hopefully we'll see you at the next one.